Hey everyone, welcome back. One of the coaches at Ungar Academy here, and this is our usual chat that we have at the weekends about the market trends over the past week. Before we start though, I invite you to please leave us a like, subscribe to our channel, and go and click on that notification bell.
Hi, we are the Ungar Academy, and we teach traders how to make money in the markets. Our founder, Andrea Ungar, had been struggling with trading for years until he developed his automated trading method, which he used to become the only 4-time world trading champion. Subscribe to our channel for free tips and tricks.
Alrighty, well, it's been another eventful week on the markets, especially the stock indexes, which had some remarkable losses, and in general we can see that there are a majority of red signs. So the whole market has suffered a setback this week. But as always, let's just go in order, shall we? So let's start with the Nasdaq, which is losing almost 6% at the moment, and it's approaching the lows that it has touched recently. We'll see if it won't break them. Negative 3.6% for the mini SP 500. European stock exchanges fared a little better at negative 2.6% for the Euro stocks and 2.5% for the DAX. I just want to point out that the European stock exchanges are still above the March lows, as opposed to the American stock exchanges, which have broken them by a wide margin. The positive note this week is the rebound in the bonds, which have begun to perform their traditional, let's say, function as an asset class inversely correlated to equities. Now, we haven't seen this in a while, and this was mainly due to the US Central Bank's policy of raising rates. The T-bond rebounded very strongly this week, and it's gaining a positive 2.87% at the moment. As for the energy markets, there was a notable fall in natural gas, which, as we know, is at quite unsustainable price levels for the economy, so that is definitely a positive note. The other energy markets also fell, negative 3.6% for RBOB, negative 5% for heating oil, while crude oil fared a bit better. As far as metals are concerned, we've been saying this for several weeks now. The trend is negative, with a negative 7% for silver, a negative 8% for platinum. On the whole, gold, well, that is the metal market that is doing a little bit better. Turning to other markets, we've got mixed returns on soft commodities. Specifically, orange juice is gaining 5.86% and is still fairly close to recent highs. Cocoa is down by a negative 4.6%. And yeah, not too much else to report, I'd say. Turning instead to the grains sector, wheat prices are continuing to fall, and this is a good thing because, as we know, both energy prices and agricultural commodity prices are linked to developments in the conflict between Russia and Ukraine. So to see these prices going down is definitely a very positive thing for the economy in general. So we were saying negative 5.6% for wheat. Corn also dropped, as well as bean oil and hard red winter wheat. Only soybeans and soybean meal remained positive. Turning now to the currencies, we saw a noticeable strengthening of the US dollar against all other currency crosses. Let's take a look at the euro dollar, which is currently at 1.0461. Lastly, Bitcoin. Well, yeah, another setback. Negative 8% this week. We're currently at 19,540, so we have broken an important psychological threshold of 20,000 points. This had already happened before over the past weekend, but the weakness of Bitcoin, and I'd say the whole actual cryptocurrency sector in general, continues to persist. Lastly, let's have a look at volatility, starting with the equity indexes. There's a contraction in volatility in the short term. Indeed, we saw a decrease over the last month, which isn't a bad thing, although swings remain quite wide and still pretty high over the long term. On the other hand, volatility is very high for bonds in the short term. And as we know, this is a sector that is most affected by the Fed's policies, so there is high volatility in bonds. Let's also take a look at implied volatility. We have a term structure that's currently in contango, so it shows no particular signs of danger, although there is a general upward trend in volatility. The current VIX value, 27.99 to 28, so we're still within the upper part of the 2022 range. At the moment, despite the even significant drop in the market over the last week, the volatility term structure is showing no signs of concern. No rollovers are scheduled for next week. For your convenience, though, we'll list the next ones by the expiry date, which will be on the July 13th for the VIX future, and July 15th for crude oil. And that is it. Before we say goodbye, though, I'd just like to remind you all that should you be interested in systematic trading, there's a presentation by Andrea Unger introducing you to his trading method, the Unger method, which led him win the World Cup Trading Championships in real money trading 4 times. I'll leave a link in the description below for you to take a look at. Through this link, you'll also be able to access other useful resources such as our best-selling book, The Unger Method, which you can obtain by paying only the shipping costs, and much more. So please don't miss it. Guys, thanks again for all your attention. If you liked the video, please leave us a like, subscribe to our channel, and we will see you again next week. Bye-bye.